Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, today we're going to talk about the cash secure put. The reason I want to show you this is because we looked at the charts and the charts are telling me this is trading in a great trading range. And remember what I always said, it really doesn't matter what I'm trading. I'm usually trading leveraged ETFs to the indexes and sectors. So what does that mean? I'm using a diversified ETF, usually to an index or a sector. Sector meaning maybe 10, maybe 12 stocks based on a sector inside a 3X leveraged ETF. Well, today we're going to talk about TNA because TNA is the 3X leveraged ETF to the Russell 2000. That is 2,000 stocks that make up the Russell 2000, a diversified basket of stocks. Now, we want to eliminate single stock risk. Now, I know there's a lot of 2X leveraged ETFs and a lot of high IV stocks out there, but I'll tell you what, in this environment where you have to be perfect and the company cannot screw up or else you will be broken, I would much rather use leveraged ETFs to indexes or sectors because in the case of SMCI, and that one fell from over $100 all the way down to $17 because of some management missteps. And to be honest with you, they just lost confidence with Wall Street. And Wall Street has been waiting for them to file their annual report. And there's a DOJ report. And I believe management has mismanaged. And quite frankly, the board should have took action. But they didn't because they're all closely tied. And here's SMCI. I'm a bag holder. I'm in much higher. And I'll tell you, that was one of those moments where the company let me down. Well, that's single stock risk, and I'm still dealing with that. I'm going to wait for earnings, and we're going to see what happens. But I don't want to have single stock risk anymore unless we're talking the biggest and best and greatest stocks on Wall Street, because they've proven over the years. SMCI may have been a great growth company, but they haven't proven anything in the past 10 years outside of having controversy. This whole controversy that's happening now, I guess happened before. So where there's smoke, there's usually fire. I don't want to be anywhere near fire, and that is single stock risk. Now, we still use NVIDIA. We still use MicroStrategy, which I'm slowly weaning off of. Because although I love the IV that comes with MicroStrategies and MSTX, it's single stock risk. And quite frankly, we know about the company, but we don't know about the company, right? It's not really clear what they do. And a lot of people think they just buy Bitcoin and hold it. Well, that's not the case. In fact, MicroStrategies is really a 3X leveraged strategy to Bitcoin. You really have to dig into the numbers to see what they do. It's not very clear. Do you want to be investing in that? It has proven to be a great selling premium stock because of the high IV and it trades within a range. But I would rather trade Bitcoin itself, it being a commodity. It's a momentum play. And with the momentum going higher, we could use BitX, a 2X leveraged ETF to Bitcoin. We want the high IV largely because we want the high premiums when we write covered calls and sell cash secure puts. But I don't want you to get risky. There's a lot of single stocks out there that have high IV, but quite frankly, I wouldn't even look at them. There's a lot of one-hit wonder stocks out there that people try to use selling premium because they're so inexpensive. They might be a $3, $5 stock and they write a 30-day covered call and get $1 for it. And they're like, what could go wrong? Yeah, then it happens and you're broke. We don't want to do that. We want to use leveraged ETFs like TNA, leveraged to the Russell 2000. And we want to use others like the TQQQ, leveraged to the NASDAQ. Or how about UPRO, leveraged to the S&P 500. Absolutely love LABU, which is the 3X leveraged ETF to the S&P 500 biotechs. That's what we want to use. Limit your single stock risk. Hey, I'm still using NVIDIA, which is NVDX. I'm still using MicroStrategies, which is MSTX. Now, we're going to wean off of those and get back to the easy swinging trades. I mean, when you look at TNA's trading range, which I'm going to show you, and even SOXL, That's a 3x leveraged ETF to the semiconductors that we use all the time. I have over 8,000 shares, knocking it down, and we've never lost using SOXL. I think I did a video where I made 60 grand using SOXL in 2024. I know I made over 57,000 using TNA. These are literally annual paychecks for some people. And we're using 1 and 2 stocks, making over $120,000. Tell you what, I don't even know why I trade anything else. But with that said, we're talking TNA. And we're talking about this cash secure put we did today. And the members have a chance to do this trade. Because when I put skin in the game, it's not like some YouTuber that just gets up on YouTube and talk about a trade. I put all of this money in the game. See, I retired December 22. And if I'm not good at what I do, selling premium, writing covered calls, selling cash secure puts, and buying dividend paying stocks for that passive income, well, I'm going to have to go back to the 9 to 5, and that's not happening. And I trade all my kids' accounts, and I can't lose money for them. Just not happening. So we have to pick great strike prices, but we also have to know a stock's trading range. And that's what I'm going to show you here today as to why I picked TNA and not one of the many other stocks or funds I just mentioned. So look, if you like anything you hear today, I want you to subscribe to the channel. It's right there and it's free. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. So let's go ahead and take a look at this cash secure put I just did today. The members got this in a blog post, email, and phone app entry. So right now you can open up your phone app. You could actually see this trade, click the link in the phone app, and it'll take you right here. What I like to do is break it down for the members. So if they were interested in following this trade for themselves, they will try to get something close as to what I did. Every single trade has a unique trade identifier. I do so many trades. The members said, how do we follow all these trades? So the unique trade identifier allows you to track this trade from start to finish. Now, looking at TNA right now, you can see it's trading in and around the top of its range. Now, we don't usually want to trade at the top of the range, and that's why we did a cash secure put in and around the 44 strike, giving us some downside protection in the short term. Remember, this is only 7 days, so TNA would have to fall from 46 down to 44, but there's a reason I picked the 44 strike, because what we try to do is 2 trades. I always show the members, look, we want to have the first trade. This would be it. Knocking down all that nice cash secure put premium cash flow. And then what we want to do is have our second trade ready to go. This is where traders find themselves in trouble. They'll put on their first trade and the stock will go against them, meaning TNA will go from 46 and move down past 44, maybe 43 or 42, depending on where the market's at. Well, they'll feel frozen. And they don't have confidence to make that second trade. Well, not here at the membership, because absolutely we put on the first trade with confidence. We actually have the second trade dialed up. And that's exactly the trade I would do. If TNA falls from 46 to 44 come next Friday, I would immediately put on a 1-week covered call at the 44 strike. We're always trying to get out at our cost basis because our money, cash is king. We can take this money and put it towards another trade. See, selling premium, writing covered calls, selling cash secure puts can be a 30-day trade. Set it and forget it. You sell the cash secure put, and if you're assigned the shares at 44 30 days from now, well, you'll be assigned the shares at 44, and then you can write a covered call. I like to do weeklies and 2-week trades so I can use time decay to my advantage. And in this case, time decay will be in my advantage because it's only 7 days. So as we start this trade today, immediately time decay starts. So all of this 70 cents will start to decay because this is not in the money, right? Stocks trading for 46. I wrote the 44. It's not in the money yet, meaning it hasn't fallen past 44. So I collect all this time value premium. And as each day goes by, this will reduce if the stock is not moving towards 44. Now, even if the stock does move towards 44, and it's likely that I'll be assigned the shares, that doesn't mean this premium will go up. Because we're running out of time, this premium can actually fall. And where I got paid 70 cents, come Thursday, I might actually be able to buy this option back for maybe 20 cents. We alleviate the obligation by paying 20 cents to close the trade. We keep the difference, which would be 50 cents, and then we move on. Now, the stock is probably trading lower, but not under 44. So maybe the stock's trading for 44.50. How cool would it be to then write another 1 week cash secure put for a strike a little bit lower? And we do this every single week, generating this kind of cash flow. I mean, this is incredible. We generate $700 or 1.21% in 7 days. If you're making 1.2% or 1.5% in a week, you are absolutely outperforming the S&P 500 hands down. And at the membership, that's what I always do. I either do cash secure puts that dial up a 1.2% for 1 week, or we'll do a covered call, which, by the way, when you buy the shares and write an in-the-money covered call, I want you to understand, this is the same trade, yet it's inverted. See, when I sell this cash secure put when the stock's trading at 46 and I pick the 44 strike, I'm going to collect in and around 70 cents. Had I bought the shares at 46 and then I wrote an in-the-money covered call, giving somebody the right to take my shares away from me at 44, basically, they will pay me the entire difference from 46.16 to 44 plus the time value premium, which usually will equal 1 penny, 2 pennies above what a cash secure put will pay. I love using the in-the-money covered call largely because I'm able to collect a little bit more premium, but I'm doing the same strategy. Now, there's a whole story behind why I use a in-the-money covered call versus a cash secure put, and it has to do with margin in an IRA. They won't afford you any margin outside of unsettled cash. I've repeated this time and time again. You have to have cash to do a cash secure put. So when you close a trade and you have unsettled cash, you have to buy the shares, then do the in-the-money strike. It's the same thing, just inverted. However, in the case of the covered call, you'd have to buy the shares, which for the most part is the risk. I would also tell you that you own the shares, and if there's a dividend, you collect it. Whereas the cash secure put, you do not own the shares. You are giving somebody the right, but not the obligation, to assign you their shares at 44. So some would say you have more flexibility with a cash secure put because if the stock were to fall below 44, you could just close this cash secure put and then roll out and down for another credit. Hey, I use them interchangeably. I don't worry about it. Why don't I worry about it? Because we're going to trade its trading range. And for the most part, we're going to try to trade it when it's trading in a range. We want to give ourselves some downside protection. So that's what we're going to talk about right now. If you want to be a part of any of this, in the description, cptdashboard.com, I have a 1 free month offer for you. Get it. Signing up people every single day. In fact, since October 4th, I have signed up 1 new member every single day. Why? Because they want to be a part of someone that's successful. He's active. He educates. He has all the tools, has all of the spreadsheets and trackers so we can keep the numbers in front of us so we can be successful. And they want to see me trade my account and my kids' accounts because I'm putting real skin in the game. And if I don't win, if I don't do my due diligence, if I'm not trading great ETFs and stocks, well, I put my retirement money at risk and we won't be retired for very long. cptdashboard.com, click Upgraded Dashboard and get your 1 free month offer, or just click in the description below. It's right there. Would love to welcome you aboard. Now, let's finish this video up. Why did I pick the 44 strike? Well, right now it's trading in and around 46. And you can see over the past couple weeks, when TNA has been sold off, it's trading between 46 and 40. 46 is high in the range for right now. So unless it breaks out and moves higher back towards 48, 49, this resistance line is going to play a big role. And I can tell you this, it's dancing in and around 46 right now. I don't know if it breaks through this in the near term. But again, our trade is 7 days. And if it does, hey, We keep all of that premium. We are not assigned the shares, and we can then use that cash for another trade. Now, if TNA does fall back, which you can see, it has been intraday, pretty crazy here, right? This is when the news came out about DeepSeek caused the markets to fluctuate. Well, notice if we pull back to the Keltner channel mid, this is the Keltner channel right here. Just use the defaults. Don't worry about getting in there and trying to nickel dime minutes and seconds and just use the defaults because we sell time. When we write a covered call, sell a put, we sell time. All I want is the big picture. And you can see right here with the Keltner channel, it's trading in and around the mid right now. So the bottom of the range would be in and around 42. Well, I'm going to split the difference. I'll be honest with you. I'm just going to split the difference. 46, 42, I'm going to go 44. But here's the real reason why. It's not because I'm trying to pick low. No, I have one trade and then I have two. And this is what I always tell the members. We want to have that second trade dialed up because you have to have confidence in your trading and your chart reading. If TNA were to fall from 46 to 44 and it falls to 42, kicking the wind out of us, we have to have confidence that when we're assigned the shares of 44, we dial up the covered call immediately. We don't sit on our hands. We don't have FOMO. No, we put on the trade. So the first trade is 44 strike. Falls past 44, we're assigned the shares. Now it's trading at 42. We can write, because it's a 3x leverage ETF, we could write a 1 week, 2 week, 44. That's our cost basis. We are literally out of this trade in 2 weeks if our shares are taken, and we probably made over 3.5% in a 2 week period. And say it falls further. Say it falls to 40. We can still get off a 44 strike and just move out some time. Remember, we're selling time, so we would push out a couple weeks, maybe even 30 days. Here you are with a stock at 44 and it's trading at 40. You'd write a 44 covered call and still get some 5% in covered call premium. See, selling premium is the golden goose of investing. A lot of people say it's dividend stocks, but you know what? You have to take money from the 9 to 5 to buy your dividend paying stocks. You have to do all these things to get money into dividend stocks. Here, we use our stocks, we use our cash in our investment portfolios, and we sell premium, which generates huge cash flow, and we buy dividend paying stocks, which then turn into passive income. This is what we do. We sell premium, so we buy dividend-paying stocks. If you want to be a part of it, cptdashboard.com, click Upgraded Dashboard, get your 1 free month. Hey, look, I'm going to leave it here. If you're interested in following me, a guy that did 600 trades last year, click the description, get your 1 free month offer. Would love to welcome you aboard. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.